Understanding your currency pair. Important. Your goal is to generate quality tradable ideas that will help your portfolio grow on a daily basis, and that's it. To make sure we do our job correctly, it is crucial to get a basic knowledge of the pair that we want to put our next big trade on. This part to many of you will just look like hard work, but let me stop you right away. It's going to take only a few extra seconds and your win rate will improve virtually right away. Here is a list of key elements you must know before taking your next trade. What's the current trend? What's the current phase? What's the average move that we can expect? What's the best time to trade? What's the correlation with other instruments? What's important levels are close? Current trend. We're always going to start with a trend study. This part can be done in two ways, manually or automatic. For a manual approach, open a blank chart without any indicator and just ask yourself this: what's the current trend? Usually, the first thing that comes to your mind will be the right answer. Write it down and draw a simple trend line to get an invalidation point. The second option is usually much easier. Add the moving average, EMA 50, on your chart. While price remains above the 50 EMA, the trend is bullish, and if price breaks below the EMA trend, it's bearish. This approach should be your choice, since there is no questioning or subjectivity in this part. You can also play with different EMAs. I like 50, but you can also try 100 or 200. Important. Always try to search the trend on the higher time frame of the one that you plan to trade. If you trade on 15 minutes time frame, try picking the trend on 1 hour. Or if you trade on 1 hour, use the 4-hour or daily for determining the trend. So if you look at this Euro USD, for example, what we need to do, we just ask ourselves how the trend looked to us. For me, this looked bearish, so I just want to draw a simple trend line, and that's all. This trend line will give me that short-term invalidation point. If it break above, I would start thinking about the potential change of the trend, but until we hold below the trend line, I want to look for more bearish movements. Let's see here again. How does this trend look? Definitely look more bearish, but if we draw that bearish trend line, we can clearly see that trend line is broken. So we want to go and say this is a bullish trend, at least for now, and just draw a trend line that will give us that short-term invalidation point, and that's all. And move on. Let's see here. Dollar Swiss franc. Ask yourself, how does this trend look to you? To me, this looks bullish, so just a bullish trend line, that's all we need to do. Now, we can use the EMA. This is the 50 EMA, and we can get exactly the same result. Let's say here, while price was below the EMA, we would say the trend is bearish. And once price push above the EMA, we would say, okay, the trend is bullish. So technically speaking, we would get exactly the same reading if you use manual or that, let's say, automated approach. Let's try over here, ASEAN. While price were below the EMA, we wanted to see more bearish movement. Once price break the EMA, trend is bullish, and we're just looking at this as a bullish trend without too much drawing or anything else. Current phase. Once we get the direction of our pair, we should start searching for the current phase. This way we are going to learn if there is still a chance to find a good setup. Again, we can use a manual or automated approach. For manual approach, we are going to pick up the high or the low of the current trend, and we are just going to search for phase 1, 2, and 3. We have developed an indicator 10x super phase that will tell you the current phase, so you can use it for a faster solution. Important. try to check the current phase on the same time frame used to determine the trend. So don't try to find the phase on the smaller time frame where you want to trade. Try to find the phase on that higher time frame, like an hour or 4-hour chart. So let's see here. If we pick up, we said this is the bearish move. So if we said that we go 1, 2, 3, we already got that 3 phases. So we know that after 3 phases, we should at least get the 3 phases to the upside. So we have 1, 2, and what we can say here is that we are in the second phase and that we at least want to see another push higher. So there is a good chance that we are going to see a trend change, at least for a short period of time. Let's see here in the dollar yen. We said this is the bullish trend. So what we want to see, 1, 2, and 3. So we are in the middle stage of the phase 3. So we still have a lot of room left, so we can play this pair easily. Let's see here. Still a bullish trend. So 1, 2, 3. So we are in that middle stage of the phase 3. We have a room to move higher, so we can continue to focus on that trend. Average market move. We're now ready to dig deeper into analyzing your currency pair. You must know what the average market move is for the pair you want to trade. This part will help you to place better targets and give you an idea of how long a trade should be in your portfolio. Like the other components, this part is already automated and available to you. Inside of the 10x Smart Dashboard, you will find an average move in pips for M15 1 hour and daily time frame. For the average 15-minute move, use the average movement of the previous 5 days. For the average hourly move, we use the last 2 weeks of data, and for the average daily move, we use the previous 30 days. Important. For faster day trades, always try to pick the pairs that have more than 15 pips average hourly move. For swing trades, use pairs with more than 60 to 70 pips per day. So let's see how that works in action. So after we open our Smart Dashboard, this is the part that we want to look. Here we can see that M15 is showing 6 pips, H1 is showing 12 pips, and daily is showing 85 pips. So we know that on average, we can expect to see, let's say, a 12 pip move per hour. And let's say we are in a trade that have a take profit of, let's say, 30 pips. And if we are in a trade for more than, let's say, 4 to 5 hours, and your take profit isn't reached yet, there is a better chance that you are going to save on the trade if you close it right away, just because there is no volatility. In the previous, in this case, 2 weeks of data, we know that price went 12 pips per hour. And if we are waiting and waiting and waiting for just a 30-point move that should ideally be done in a 3 hour, it's definitely going to be a waste of time. But like we said, we ideally for a day trading want to see a 15. In this case, it's 12. But we see that a daily is 85. So this can be a decent swing trading play. Let's see here, Euro USD. M15 4, H1 10, daily 58. So same thing. We know how much we can expect to see from this pair each hour. Of course, that doesn't mean that Euro will just move 58 pips per day or just 10 pips in 1 hour. But this gives you some clue of what's that average that you should focus on. Now, what's the good thing to remember here? When we have a strong news coming on like the non-farm payroll or the interest rate, I would double this amount. So just use M15 as say it's 8, H1 say it's 20, and daily say it's 110. Also, how you can read this data is, let's say we see that euro is doing 58 points on average per day in the last month. And we are now around the 55, 56 pips already today. Then you can start thinking, okay, maybe it's too late for this pair for today. I have a more chance to make money tomorrow. It's because for today, there is a good chance that this pair is already done that move. Let's see here. Dollar Swiss franc, more or less similar to the Euro USD, 5, 10, and 64. The next thing is the best time to trade. The currency market moves 24 hours, 5 days a week. But that doesn't mean that the Euro USD pair, for instance, will move the same amount across the Asian, European, and the US session. You always need to know what instruments are active during the time when you plan to find the next setup. We are again going to display a small graph for each pair on the 10x Smart dashboard that will give you a clear idea when can you expect the strongest move in the market. For this calculation, we are using and comparing the last 3 months worth of hourly data. This process won't require a lot of updates. Check it once per month and select all pairs that are showing the best momentum in your time zone. Swing traders can skip this step or use it only for determining better entry timing. So it's just above that average hourly move. And what we are looking here would be the time where we see the strongest candles. All the green candles are history, and we have the white bar that represent the current hour. So let's say from the Swiss franc yen, we can see the strongest bar between, let's say, 5 to 1 p.m. That would be around the Asia till New York Open. So there is no reason why I would trade the Swiss franc yen during the US session, because the strongest move usually happen in the Asia and UK session. Let's see here, euro pound. So here is slightly different reading, but we can see that the strongest move happen around the UK to early US session. This is a time when I want to focus on the euro pound. Of course, you can focus on any pair in any session, really. But if you want to day trade and have the best possible outcome, I would only select the pairs that move during that early to mid of the UK session, since that's the time when I usually like to trade. Let's see here. Euro Aussie. We can see that Euro Aussie move a lot. Like, we only have the drop in the volatility in the late US session and in the early Asian session. But from the middle of the Asian session all the way till the late New York session, this pair is fine and perfect for trading. So I don't think this part is going to be hard, because everything is there for every pair. And all you need to do would be to go once per month. Check all the pairs, see if something changed. Usually you won't see much changes, so you won't need to do this a lot. But what I recommend you to do, like if you trade the US session, find the pairs that usually move during that US session. Especially if you want to day trade, or if you want to swing trade, you can skip this step. Currency correlation. Correlation is a statistical measure that determines how asset moves in relation to each other. This idea can be used for individual instruments like the Euro USD, for example, and we check how the Euro USD moves compared to the pound dollar. Or we can use an entire group like the dollar group, where we check how all the dollar instruments react against other instruments or groups. Correlation is helpful to keep the overall risk of your portfolio lower at all times. It's important that we stick to trading a maximum of 2 pairs from the same group, or that have a good correlation. For example, If we are holding Aussie dollar long and the euro dollar long, we have two instruments from that dollar group long. So if we want to add the more trade, it's better to then search for a place in the yen or cross group. Let's see a few charts of market correlation and why it's really important. Now we have Euro USD versus dollar Swiss franc. The pink one is the dollar Swiss franc, and we can see that they are doing the same thing just in opposite direction. So they have that negative divergence. So if Euro USD move higher, there is 90% of the chance the dollar Swiss franc is going to move lower. Of course, keep in mind that the correlation is never going to be perfect and 100% thing. But you want to know at least how pairs react among each other, just to make sure that you're not taking too much trade. Just because, let's say, you're taking long in the Euro USD and you are trying to take a short in the dollar Swiss franc just because you know they should move against each other and one of your trade hit a stop loss. There is a good chance that both of your trades ended as a loss, and then you would just double that loss. That's why it's much smarter to try to trade the pairs from a different groups. This way, you're always going to improve your overall risk. See, here is that, let's say, a dollar group. We have the Euro USD, Aussie USD, Kiwi dollar, and pound dollar. So more or less a majority of the dollar pairs. As we can see, overall, their trend seems to be the same. Of course, the move won't be exactly perfect matching, but the overall direction will be the same. So if we are taking one of or two of these pairs, adding third or fourth would just be a waste of our time. Let's check over here. Adding more pairs to equation. We can see that the entire market is usually going to do the same thing. This is entire dollar group. Let's see, dollar CAD, dollar NOK, and dollar Mexican peso. You can see they're all doing exactly the same thing. And the reason for that is that all three pairs are highly correlated with a crude. So they are going to follow the crude, but they're also going to follow each other. Also, why it's helpful to know the correlation is that you can always find a backup thing to trade. For example, maybe you found a good trade setup on, let's say, a dollar CAD, but your risk reward is just 1.1. If you check the dollar NOK or dollar Mexican peso, you are going to probably find that one of those two pairs will give you exactly the same setup with a much better risk reward. Or if you miss the entry, there is a good chance that one of those pairs still didn't get to that entry point. We are going to talk more about the correlation in the later videos, but for now I think this will be enough. Important levels. We learned a lot of different methods so far that can help us determine strong levels. We want to record and be notified about strong important levels as they appear. You can do this by using one or more of three categories: Fibonacci levels, Fib levels from higher time frames, support resistances, simple support resistances on a larger time frames, channel points. We want to know when the market tests an upper and lower channel lines. Important. This part can take some time to do, so I strongly suggest that you write down levels during the weekend so that you can focus on trading during the work days. You can update levels once every 2 days. And like we said, you want to stick with the higher time frames for this part. So like this is example of what I want to keep. Like I want to keep support and resistances, blue horizontal line. After that, I want to know that channel. In this case, that would be a double channel. And if price tests that lower channel line, I want to know that. But I also want to draw a simple Fibo that will tell me, okay, if some important Fibo level is reached. Let's see here, your USD. Again, same thing. I just draw two channels, few supports and resistances, and the Fibonacci. You can always use and place alerts for every single thing here, but I wouldn't recommend it always just because you can get a lot of alerts. Maybe what you can do would be to pick up only 2 alerts for each pair, the 2 closest things, so you are only notified if something happened right now. You don't need to wake up seeing 101 alerts. Just try to make everything simple for you to understand, and that's all. How this help your trading strategy? Keeping track of small details about each instrument can only improve your current strategy. We are going to use this approach to learn if the pair that we are currently looking at is worth trading now, or whether we should be waiting a little bit longer to provide a better opportunity. We are going to know how long we should be in a trade for and when the best time to look for a play is. For example, we are in the early stage of phase 3 bullish. You should only look for the trend rates in that direction towards recommended levels. There is always more information about the market that you can add to your research. However, for now, I think this will be enough for this stage. Now you can attempt to gather information on few instruments of your choice.